What's up, guys? Welcome back to Everyday Money. If you've been here for more than 5 or 6 seconds, you've probably heard me talk a lot about stocks and index funds, and that's great because they are cheap and easy to get into, gets people's money working for them. But deep down in my heart, I am a real estate investor. I love real estate. I like houses and everything that goes along with them. And I really think that it is one of the best ways for the average guy to get ahead and to really build wealth for themselves in a short period of time. If you take one of our apartment buildings, for example, this is a real life example, over the course of our ownership of that apartment building, we have achieved a 50% cash on cash return annually. And it's for sale right now. It is under contract, and when it closes, if it gets anywhere near what our contract price is after repairs and appraisal and whatever, we are going to be looking at an average of 130% cash on cash return every year. So right now what I want you to do is I want you to invest in smashing that like button for me to help me out in the YouTube algorithm. And I want to get into the biggest roadblock that people run into in investing in real estate, and that is where to come up with that down payment money. Because unless you're already wealthy or whatever, you're probably wanting to invest in this real estate in order to make money because you may not have as much as you want. And depending on what your market is, that 10 to 30% down payment that you're going to have to make, via, you know, if it's a vacation rental, you can get that away with like 10%, or if it's more of a commercial property, you're probably going to be looking at 30%. And I have compiled several different ways that you can come up with that down payment money without breaking the bank, so to speak. Now, before we get into the ways that I have come up with that you can get your down payment money, there are a lot of folks out there that will say that you can get into real estate with no money whatsoever. And there may be a way that you can do that, that you can, you know, work in between the cracks and what have you. But for the most part, you're going to need some money to get into real estate. There is no bank on earth that's going to lend you 100% of the price for a building if you have no money. Even hard money lenders and things like that are going to require you to have some sort of skin in the game so that they know that you're actually going to follow through on this and not bail as soon as the going gets tough. Now, maybe you can try to do a wholesale assignment type of thing, if that's even legal where you are, and try to do that with no money. That's, you know, up to you. But for the most part, the typical either buy and hold or fix and flip real estate investing, you're going to need to have some skin in the game in order for anyone to loan you money or to just to buy a property if you wanted to pay for it in cash. So let's get started with these methods for you to build up an amount for a down payment. The first one is just simple savings. You know, if you need $40,000 for a down payment, you can say, I need this, I have 4 years to do it in, I need to save $10,000 a year, and you know, that is a simple way to do it. It's tried and true, but it's difficult because you're going to need to save that money every month. And not only are you going to need to save that money every month, but inflation is going to be eating away at that saved amount by, you know, at least 3% or so a year. And while that inflation is nibbling away at your savings for the down payment, the real estate market is also going up at about, you know, 3% or so on average. Now, your real estate market might be going up significantly faster than that, and you might need to move quicker. But at the minimum, you're going to be, you know, losing like a 6 or 7% spread every year to inflation and market appreciation. So the second way that you can get a down payment for a piece of real estate is that you can take a home equity loan on your primary residence. And you can use equity that you've built up in your home over time to withdraw that and use it for a down payment on an investment property. The cons are that there's going to be some fees for that home equity loan. There's going to be, you're going to put your primary residence at risk. If everything falls apart, you could potentially lose your home to that. And the rate is going to be a little bit higher than a primary mortgage. The big pro is that this is going to be tax-free money to invest. When you get that money out of your home, you are not going to have to pay any kind of taxes on it. It's just going to be, you know, given to you as a loan, and you can use that to do with as you please. Now, if you already own rental property, you can also take essentially home equity loans from those. They're a little bit harder to get. They have, I'm sure, higher down payment amounts or loan to value amounts, much higher rates, because that is now a lot more risk on the part of the bank, that you can walk away from that property and you still have a place to live. And, you know, the worst that happens to you really is that your credit score gets a ding. So that is an option if you already own property that has equity in it. Now, you can take money from other investments that you may have, such as a taxable stock account. You can take any of that. Just watch out for the capital gains that you're going to have to pay on that. If you have a Roth IRA, you can withdraw any contributions that you've made tax and interest free, or tax and penalty free, because you've already paid the taxes on that before you put it in, because that's a post-tax funded account. Additional that you may have had from returns on that account, that would be subject to penalties and taxes, but just know that that option is available for a Roth IRA. You can take a 401k loan from your employer. If you have a 401k, you can take a loan from that. A lot of times the terms are up to the individual employer, so you'd have to look into how much you can take as a 401k loan and the repayment terms, and that is between you and your employer. And then finally, you can withdraw from a traditional IRA, but you're going to have to pay a penalty and you're going to have to pay tax on that, because it was put in as pre-tax money to be taxed when you withdraw it. And so because the tax hasn't been paid on that, Uncle Sam is going to want their tax, plus they're going to want a penalty for accessing that money before you are 59 and a half years old. Now, a fourth way that you can get this down payment money is you can partner with a money partner. You can bring somebody on that has money and wants to deploy it into your real estate ventures. And there's a million different ways or more that you could structure this. It could be strictly that they have money, they don't want anything to do with the property, and you have skills and ability, and you can make that happen, that fix or flip or that long-term rent, and you guys can set up some sort of payment schedule. It could be that you're just going to go 50-50 on a partnership for money. Like, you might have half the down payment, they have half the down payment, and you can structure that. But just make sure that you structure an agreement, and you structure ownership stake, and you structure payment options and how that's going to be paid out, and put that in paper, have an attorney draft that up so that you don't have any hurt feelings or misunderstandings that could end up to be legal misunderstandings. And then the fifth way that you guys can do this is that you can owner occupy buildings. And now, this doesn't necessarily get you the down payment, but it reduces the amount of the down payment if you can take a 3.5% down FHA loan. And what you can do there is you can buy single families or you can buy multifamilies up to 4 units and only put down 3.5% down, because of the FHA loan requirements that say that you can do that. Now, you're going to have to pay MPI on that loan. You're going to have to pay a 1.75 upfront MPI fee on that loan, but you will be able to get this property for 3.5% down. The kicker to this is you only have to live in it for 1 year. So you can buy that property, that multifamily, you can rent out the other units, and then once you've lived there for a year, you can now move out of that building or that single family or whatever. You can rent out those other units and you can get another FHA loan for 3.5% down. You can just rinse and repeat that as long as you want until you're sick of moving, or you just have as much as you want, or whatever. Now, the best part about these is that for the most part, you can do more than one of these. You can do these more than once if you want to. Obviously, you know, there's simple savings. That's going to probably be tapped out in your first 1 or 2 deals. Home equity can get tapped out, but you can pull equity out of the investments that you have purchased, you know, in the last 2, 3, 4, 5 years, if they've gone up in value, or if the notes have been paid down because of, you know, rental income paying down the notes. You can bring on more money partners if you want. Obviously, that gets a little tricky with the other partners, or you can do this owner-occupied type of deal. In addition, you can use the BRRRR technique, which is buy, repair, rent, refinance, and repeat. And what that allows you to do is to purchase these properties, preferably under market that needs some fixing up, fix it up, get it rented. As soon as you're eligible to refinance, or try to refinance all of your original capital out of it, and then repeat. And so you basically just take the property, get your down payment money back out of it after a certain period of time via refinancing, and then just repeat that process over and over again. So you can use that same down payment money to just continue to buy properties over and over again until you have the portfolio that you're looking for. So those are 5 tried and true ways to get down payments for your real estate investment aspirations, and then a couple of ways that you can use those over and over again to just grow your portfolio to wherever you want it and not have to worry so much about coming up with these down payment amounts that can end up being in the tens or hundreds of thousands of dollars that you may not be able to simply save up for, you know, on a reasonable time frame. Guys, I hope you liked this video. If you did, be sure to smash that like button for me. It really helps out this video and this channel in the YouTube algorithm. If you haven't subscribed yet, go ahead and subscribe to grow your wealth, increase your success, put you on the road to financial freedom. And we have a little bit of fun around here too. Love talking about finance with you guys. If you have any questions or comments, be sure to leave them in the comments for me. I appreciate you guys watching today, and I'll see you in the next one.